What is going on, guys? Let me know if you can hear me. Since I'm doing this from a location that I'm not used to doing it, obviously I'm not at home right now. I'm in Europe. So let me know if you can hear me. Let me know if the connection is good. It says the connection is good. CPI is going to be coming out. Good afternoon. What's going on, Sonar? Sonar, what's going on? I'm right next door. If you're in Turkey, I'm right next door to you. Up or down, that's not how the market works. That's literally not how the market works. So I don't know why you're asking me to be Nostradamus. If you had to ask, if I had to guess, I would say that the core is what is going to be focused on more. But we've all seen, the market go up on a negative CPI report for the day and then follow up with the actual move and vice versa, right? So, go up or down is not really a question. Obviously, when we day trade, we're going to be taking trades according to what the market is doing. I'm not trying to guess right now what the market is going to do. So to me, the up or down question is not really one that I even entertain. It's not one that I even think is valid, right? With that said, I want to take a look at what the market is doing now. CPI gets released in 13 minutes. So not yet released. What is expected for CPI? So CPI, geez, what was that? All right, so CPI is expected to rise 0.6% in August after increasing by 0.2% in July. So coming in actually higher than we did last July. Now, this is due to, as I said, rising oil costs. So oil is near $90 a barrel. If you take a look at oil right now, if we take a look at CL futures and you see that oil currently is at $89 a barrel, which is crazy considering that we hit the low 60s at around 63 back in May. So oil, and this is due to some of the geopolitical affairs right now surrounding Russia and Saudi Arabia, both of them agreeing to cut supply. So they are cutting supply by about 1 million barrels a day, which is putting pressure on price. And obviously, they control the oil market. They're allowed to do whatever. This is why a lot of people have been criticizing this administration for not competing with that, at least in the short term. Obviously, in the long term, I think we have to move towards cleaner energy. But in the short term, we're still beholden to a lot of geopolitical shenanigans, and we have no control over oil price if they decide to cut supplies. So that right there is probably the leading reason that economists are expecting CPI to rise month over month 0.6% after increasing by only 0.2% the previous month. Now, here's where I think the market is going to focus on more. And what the Fed is going to focus on more is core CPI. Remember, the difference between regular CPI and core CPI is that core CPI strips out food and energy because those things can be considered volatile and in the Fed's eyes, not really a good measure of inflation, even though I personally think that that CPI is a much better measure of inflation than core because food and energy actually constitute a huge portion of people's expenses. So how can you calculate CPI or how can you calculate inflation while leaving those two things out as if they don't matter? The CPI year over year forecast is 3.6% after rising to 3.2. Remember, this bottomed out in June. June CPI hit 3 flat, and then we went to 3.2 in July, and now we are on the rise again, as CPI is expected to hit 3.6% last month, again, due to oil, but also due to services inflation. We saw the ISM numbers come out 2 weeks ago, and those ISM numbers came out much higher than expected. Actually, that was the beginning of last week, if I'm not mistaken. I can't remember now. I'm on a different time zone. So it was either a week or two ago. And then core CPI, again, which strips out volatile food and energy, is expected to rise 4.3%, less than July's 4.7%. So I personally think that if core CPI comes in at 4.3% year over year and at 0.2% month over month, then I think that the market will interpret that favorably. And I think that the Fed will pause in September, on September 20th, which is next week, exactly next Wednesday, right? So I do think that the Fed is actually going to pause if that is the case. The only way that the Fed doesn't pause in September, on September 20th, is if CPI just comes in surprisingly high. Like, I can't even imagine what would happen if CPI came in at a 4 handle or above, right? Imagine it comes in at 4% or above. I think the market will absolutely tank if that happens. So this is a very important CPI because right now, Fed funds futures investors and bettors are predicting that the Fed actually pauses on September 20th. 93% think that the Fed is going to pause. I personally think it's going to be a skip, meaning they will raise again on November 1st, in my view, and that will be the last raise. But I went over already. If you watch my last video, there was a bombshell economic report released by the Fed that was kind of quietly released that talked about they don't think that the worst is here yet for unemployment, and that only about half of the effects of the rate hikes have taken effect, and that we have about 50% more of an effect on unemployment that has yet to be taken place. And they also predict that we're going to see a significant downward pressure on GDP as well. So let me get to your questions. Oh yeah, we are doing a new fundraiser today. We are raising funds for the IRC, and this is due to the floods caused by Storm Daniel that actually started here in Greece, where I am now, and then made its way over to Libya. There are already 6,000 people dead, over 20,000 displaced and missing. So that is why we are doing a fundraiser. So as opposed to sending me super chats, make sure that you hit the donate button and donate to that if you would like to. So, all right, let's see. Good morning. What's going on? Lyle, Fishfold, Ian. Oh, there's a pigeon on the balcony. Kevin, Lori, Anthony, Jordan, Roberto, what? Roach on a tree. What's going on? Surf and Dragon, Eli Remodeling, Jarhead, Duwan Kim. What's going on? Noor, Wall Street Joe. ES price target going to hit 45.1850 in 10 minutes. I don't know. Mark, what's going on? Let me take a look at that. Christopher, what's going on? JP Therapy, what's going on? All right, let's take a look at ES. So obviously futures are flat now because we are waiting on CPI. CPI will come in about 6 minutes. We will be covering it live here. I have CNBC waiting on this. American Airlines, Spirit Airlines cut summer profit forecast on higher costs. This just came in. So obviously that is not the live, breaking news that we were waiting for, but interesting. Obviously airlines are going to be reeling from higher fuel costs because much of their costs are in the form of fuel costs. Right now, it looks like on ES, on the S&P 500, we're down 0.03%. NQ is down 0.01%. Funny enough, RTY, which is the small cap index, the Russell, is up 1.11%. There may be a play. So a lot of times when ES and NQ, when it doesn't look like there is a play there, an optimal play, we tend to find one in RTY. So I'm going to keep my eye out on RTY, especially since it's up 1.1%. If it is going to go the other way, if there is a down move, then we can likely play a Why am I at a loss for words? If there is a potential down move, obviously falling from 1.1%, there's a lot of runway on that down move if it is going to take a dive. Looking at the 2 hour, looks like it has really been barcoding for an entire week. This is since September 7th. And we are definitely waiting for CPI here. So we are hitting a FVG on the 2 hour, but this is not enough to short it. So, but I will be keeping my eye out on RTY for a potential short here, especially since we have this head and shoulders on the daily. But on ES, still flat, NQ still flat, waiting on that CPI data. So let's see. In terms of where we are at right now with unemployment, we are ticking up, not quite yet pre-recession levels on unemployment, but you do tend to see unemployment tick up before recessions, right? These gray bars here are recessions. So unemployment does go from a low and starts to tick up. So I imagine sometime next year when unemployment starts inching towards 4% and above, then we will be in potential recession territory. Same thing as the yield curve. If you look at the 10-year, 2-year yield curve, this right here, let me collect more data. So this right here, you tend to see that the yield curve starts flattening, right? Meaning it goes back towards zero and above zero, where the yield curve then starts acting more normally. It does this before a recession. So right now the yield curve is still heavily inverted. We have not yet flattened towards zero, but once that starts happening, again, I expect this to be sometime next year, then we'll be closer to a recession. Now, I always get questions about, hey, if we're going to hit a recession, why do you think the stock market is going to keep going up? Well, one, we are in a bull market. And when we hit a bull market, traditionally, we don't go back to a bear market immediately, right? And also before every recession, and I did this in my last video, before 2020, before 2008, before 2001, we always hit all-time highs before dropping into a recession. So I think the stock market can hit all-time highs later this year and maybe even surpass it. And then by the time we drop into a recession, we're going to drop to a previous high. So I don't think that the S&P 500 is going to hit a bear market anytime soon. I do think once we get closer to a recession, whatever event is going to bring us towards that recession, then I do think we're going to drop to a previous high, right? So that is my thesis. We can even hit 5,000 on the S&P 500 before seeing a recession. All right. Anonymous, $20. Another anonymous, 20 euros. Thank you so much. Another anonymous, $20. Appreciate you guys donating to the IRC. Thank you guys so much. Mark says, what's going on? JP Therapy, Scotty G, Nasser M, Bali, what's going on? Marcel, what's going on? Timur, if inflation is higher than expected, then will S&P go down, right? No, not necessarily. Good morning from Brazil. What's going on, Pedro? How are you doing? What do you predict for CPI for month of September? Dude, I don't know. I'm not Nostradamus. How can I tell you? I don't know. I honestly, I don't know. If I knew, then number one channel for CPI day. Appreciate you. More than just that, channel guy trader. But if I knew, obviously, I would be taking a humongous trade. Like, nobody can tell you, especially, all right, you know what? Let's see what CNBC says. Oh my God. 1 second. Hopefully it lets me watch it without a VPN. Okay, cool.
Going way back, you have to go all the way back to February of 2022 to find a bigger number. When it was up 7 tenths, actually in March it was up as well. So now if we consider that the high water mark here in 2005 was up 1.2, yes, we've made progress, but this follows up 0.2%. Strip out food and energy, up 0.3%. Year over year, up 3.7%. That is hotter than expected, hotter than the rearview mirror, and 3.7, the last time we were anywhere near there was up 4% in May. And if we look at year over year core, which in my opinion is probably the most important, 4.3%. Now this is interesting. It's down from 4.7, exactly as expected at 4.3. But once again, let's go through the litany here, okay? We haven't been below 4% in this metric going all the way back to May of 2021. Last year, over half were above 5%. So this is still quite sticky. What has the market done? We've gone from a 431 yield in 10s to a 433 yield. So at 433, we're up a handful on the session. You can see that two-year note yields have moved up to 507, 508. Currently, the high yield close there is 508. These are very important technical levels. And if we consider the pre-opening equities have gone from, as Joe pointed out, down 12, 13, 14 in Dow futures to down 75. Now, if we consider the year-over-year numbers, the 3.7 especially is something to pay close to. Whether you separate those out or not, the Fed committee is certainly not in sync with most Americans or even other economies that don't separate those out, especially at a time where the transition, as ugly as it may get with regard to EV, is one of these sticking points that could keep not only energy and electricity costs higher, but all the cottage industries associated with the transitioning and the auto industry. Joe and the panel, back to you.
All right, Rick, stay with us. For more on the new data, let's bring in Michael Strain, Director of Economic Studies at the American Enterprise Institute. What'd you say? I'm sorry. Emily Gee, Senior Vice President for Inclusive Growth at the Center for American Progress, and our own senior economics reporter, Steve Leisman. Steve, we'll go to you first. It's weird, isn't it? Everything, economists did a pretty good job of forecasting, but it still doesn't kind of causing a little agita.
Yeah, I mean, look, I kind of see good news in this, Joe, and, you know, people can throw things at me if they like, but the thing that stands out to me, I just want to double check this. Owner's equivalent rent came down again, just double checking that. Just want to get the number right, but we were at, I think 0.4 is the number we have, so that's a help. And when I look outside of the energy complex, Joe, it looks like prices are pretty well contained across the board. And by that, I mean, you did have a pop in airline fares and motor vehicle insurance, which raised transportation services 2%, but medical care services up 0.1%. Some of the other elements in here, used cars fell again 1.2 percentage points. So Rick can go out and get himself another jalopy if he likes. And food at home was pretty well contained at 0.2%. Food away from home, 0.3%. So we're not as yet, and this is why you got to be careful here, seeing a bleed from higher energy services into other prices immediately. There may be other issues down the road. There could be some pop-up in inflation expectations to worry about. But for the moment, the surge we got here is in energy services. And the question becomes whether the Fed finds comfort in the core, which has been coming down. It is a little hotter than expected, as Rick said, but the year-over-year rate has been coming down.
Emily, we just had Sean Fain on. We've been talking all day about where some of this inflation is really, what's the root cause for a lot of it, and some of it is still labor. At the Centers for American Progress, I'm just wondering what you think of the summer of strikes that we're in right now. Are these going to be the low numbers we're seeing now once some of this filters through? Some of the increasing wages that we're seeing. I mean, the UAW is asking for either 40 or 36%. And is that a good thing, do you think?
So I think we have to look at the big picture. We do expect some month-to-month increases or decreases, just like the stock market. But the overall trend does show us that inflation that remains moderate. Just for sake of comparison, last year at this time, we were at an 8.3 annual inflation rate. And we are seeing prices for some core consumer goods like chicken and eggs and used cars actually come down in July. But I do think that it's important that we keep watching the unemployment numbers as well. We're seeing steady and healthy and sustainable growth in jobs, but we'll also, we think that the Fed should proceed with caution as it considers future rate hikes to make sure that we aren't, raising rates too high and possibly sending the economy into recession, which would be the worst thing for workers.
Well, the labor market remains pretty tight. I guess my question was, do you think that we're in danger of having this turn into, inflation is here, I make this, I want this so I can deal with inflation, and then that causes prices to go up, inflation gets, the classic wage price spiral. My question was about 40% wage increases for all the hourly workers at the big three. Is that inflationary in your view?
So we do think that it's important for UAW and the big three to find a common ground. And
all right, let me just summarize for you real quick. Inflation coming in, the core came in at 4.3, which was what was expected year over year, but month over month came in slightly hotter. So 0.3% over 0.2% expected. And also, if we talk about regular CPI, headline CPI, it came in at 3.7% versus 3.6%. So 0.1% hotter on core month over month and 0.1% hotter on headline year over year. Now, that is obviously not what the Fed wants to hear. They would have much rather seen, they would have much rather had inflation come in lower. I still think that they're going to pause. Let's actually take a look and see if the Fed funds futures are changed. But I still think that they are going to pause. So we went slightly from 93% to 91%, still overwhelmingly betting that the Fed is going to skip at the moment, right? And the market is yet trying to interpret what this means. We see the market back flat again. There are no indications yet of where the market wants to go. We did take liquidity from the buy side, right? Clearing out this level of support here. You could see this wick. I don't know if my big head is in the way. Let me actually make this bigger. But you could see this wick here clearing out this level of support, taking all that liquidity before shooting up. There's still no trade for me here yet. Market is still not open. The market will actually open in about 50 minutes. So no trade for me here yet. I'm not surprised by this reaction because we don't yet have a lasting reaction or an established trend, right? Like taking out wicks from both buy side and sell side is just par for the course. That's going to punish people on both ends. Both longs and shorts can lose at the same time because if price, ends up tagging people who are short, if it ends up tagging their stop limit, and then people who are long, if it ends up tagging their stop limit, both shorts and longs can get tagged, which is what liquidity seekers would love, right? So right now we are at 0.08%. Down on S&P, 0.2% down on NASDAQ. That is really so far just a regular day, but obviously the market is not open yet. And there is no indication of what the market wants to do. Now, you could make the case that because the year over year number for core came in as expected, that there is nothing of alarm yet, even though the month over month came in 0.1% above. So in my view, if I had to guess, I do think that the market will likely continue down for the next week. It doesn't mean we'll be down today. Remember, the initial reaction is not always the lasting reaction. And I haven't looked at the chat yet, but I bet you in the chat there's a million people that are like, why is the market going up? Or, why are my shorts getting killed? This is what happens when you trade on CPI day is the market is going to seek liquidity in both directions. Both shorts and longs will get punished initially before the day ends up picking a trend. So, all right. Price found support on your hair. Oh, is my hair in the way? Dump it. I like that. CPI comes in at 3.5%, then gets revised. Friday market closed to 3.8%. That will be bonkers. Yeah, I don't think it'll be revised that quick. I wish the market would wick up. The market did wick up, and it also wicked down. Hit that like. Yes, guys, hit that thumbs up. Hit that thumbs up so that other people can find the stream. Inflation means the market is heading higher. I don't know what that means. My rent just went up 200 this month. I bet you that's most people's story in the U.S. There is no unemployment. It's just people don't want to work. All right, that's crazy. Just came to drop a like and go back to bed. All right. No pop or pop down. How does FANG T stocks react prior to, during, immediately after a recession? Should we wait for a pullback to buy additional shares? You want to buy tech right now? That's insane. If you want to buy tech right now, you had all the time in the world to buy tech. I don't know why you would pick now to buy tech. It could be flat at the end of the day for all we know. Let's see what open shows us. Yeah, it's going to dilly-dally like this for a while, but then by market open we should get an indication of what the market wants to do for sure. Now from a larger perspective, from a larger trend perspective, I do think that we are still in a case where we don't have clear market structure in my view, right? So I wish I had there are some times when patterns will develop more clearly. In this case, we do have a head and shoulders, right? But we also have the price here stuck in this daily fair value gap where we could see a pop up. Once again, I think the market is going to be waiting for what Jerome Powell is going to do. Now, if Jerome Powell skips, I think the market will continue running higher. Until then, it's not plausible, or it's not impossible to think that the market can hit this 4,400 level support here before next week. So that is what I'm leaning towards, hitting that 4,400 support. Let's see, on SPX, it would be, what would it be on SPX? Yeah, it would be around 4,350 on SPX. All right. You have a friend in Seattle. Thank you. Adobe pre-earnings, maybe. VIX pop. Click the thumbs up. Yeah. Hit the like button for sure. How is Dixie? Dixie's up 0.19%. VIX is up 1.2%. TNX is up almost 1%. So nothing alarming as of yet, to be honest. Nothing alarming as of yet. In terms of the trifecta, those three things that we pay attention to. All right. I do want to see if I can take a trade. Oh, we just filled this gap here. I didn't realize that there was this air gap here from Friday on SPX that we literally just filled. This gap. I'd be curious to see if we can pop up from here, at least temporarily. So far, there are no trades to be taken here, in my view. Now, I do think that that Apple can actually hit the 160 range. I don't know if you guys caught the event yesterday, but definitely lackluster. There wasn't anything of note yesterday in the Apple event. Also, I want you to take a look at this pattern here, right? So let's say that we inverted the price chart. So I can't remember how to invert this. There was a quick way to do it. If I can't find it, it's fine. But let's say that we inverted. Let's see, move scale to the left, labels, blah, blah, blah. Oh, okay, invert. So if we inverted this, you would actually think that this was bullish, right? This is Apple's chart here. If we inverted this and we came from a long period of decline and then we started rounding here, you would consider this accumulation, right? Now, if we take a look at it regularly, if you think that would be the case, then this is a distribution pattern, right? It looks like an inverse Adam and Eve. Plus, yesterday, we didn't get a great Apple event, in my opinion. There was nothing of note. iPhone 15, Apple Watch Series 9. It seemed like it lacked a lot of innovation. Right now, Apple, in my view, with declining revenue, seems a little bit expensive, and I would like to see it in the 160 range. So that is what I'm banking on. I might take that trade today on Apple. We'll see. And then, like I said, on AMD, I might leg into the Iron Condor on AMD. So those are two things that I'm looking at today. On ES and NQ, still no trade for me. This right here is untradeable. So we will wait to see closer to market open how it interprets CPI. Are you waiting for opening bell to do what? To trade on ES or NQ? There is no trade. What would you trade here? I'm not necessarily waiting for opening bell. It's just there is no trade here. Like, what would you trade here? Right? There's no entry yet. All right. All right. Also, I must tell you, since we are on the live, that I am working on the mastermind slides. We are revamping the mastermind come October 3rd. We're going to be doing a whole new mastermind curriculum. So it's Mastermind 2.0. We're going to be doing technical analysis, trading, options and futures. I'm going to be teaching it. It's going to be 4 weeks, 8 classes, and we're going to be running this mastermind often. However, we are now taking signups for the mastermind. So make sure that you click the link below if you want to be on the wait list for the mastermind. Answer these questions. If you are approved, you're going to know pretty quickly if you're approved. If you're not approved, then make sure that you keep applying in the following months whenever we open up registrations. But if you are approved, then I will be happy to host you. But I will be teaching the class myself. I am working on the slides as we speak. So make sure if you want to be part of that October 3rd launch, when we are relaunching Mastermind 2.0, you click the link in the description. But yeah, to that person who was asking if I'm waiting till market open, I'm not necessarily waiting till market open. There just isn't any trade that I'm looking to make right here, right? Let's see. Dollar fell a little bit. You need to get on All the Smoke podcast. Why? Because you think I look like Matt Barnes? Hit me with the Matt Barnes joke. No drip. I would love to get on All the Smoke. Oh my God. But come on, dude. I'm not big enough to get on that podcast. But I would love to get on that podcast. What is CPI going to be? It's already out, bro. Biddy back to 26,222 resistance. Oh, Bitcoin. Dixie dip. Yeah, let's see. It's funny, those people that went ultra short on the S&P, I don't think that they factored in core CPI. They were just thinking of headline CPI, but I would have not been been short on the S&P coming into this. Now, I might take a short later in the day. It all depends on what happens here. So what I'm looking for is I'm looking for a liquidity event, which it looks like we took from the sell side more than the buy side, right? We took liquidity below this support, and now I want to wait for a break in structure or a shift in structure to the bullish side, and then a retracement, and that's what I will take along. So that's what I'm waiting for. And of course, my second monitor is not working now. Fuck. 1 second. You know what? Doing live streams with the iPad, sometimes it's just absolute shit. I'm using it as my second screen here while I'm traveling. A lot of times it works. All right, let me see if I can get it to open. Okay, cool. But you have to restart it every now and again. Guys, if you are on the stream, make sure that you hit that thumbs up so that other people can find the stream. I don't know. How many likes do we have? This is atrocious. There's only, all right, if you want me to give you a trade for free, make sure you hit the like button, all right? Make sure you hit the like button. Otherwise, I'll go dark and just trade with the Academy and the Discord. If you want me to give you a trade on stream, make sure you hit the like button. Because there's, I don't know, 1,000 of you here. This is atrocious. And there's only 200 likes. No, that's not good. Make sure you hit the like button. If you want a free trade, make sure you hit it. Otherwise, I'll just send the alert in the Discord. All right. All right, we're approaching equal highs here on ES. Let's see what NQ looks like. Once again, if you shorted the market, you got spanked so far, but the market is not open. For those of you joining late, CPI came in as expected year over year, came in 0.1%. As expected year over year core came in 0.1% higher headline year over year and 0.1% higher month over month core. But year over year core came in as expected. So we might get a muted response from the stock market because there is no reason to panic and there's no reason to rejoice here, right? I think that economists were already expecting CPI to come in higher, and it did. So we are approaching these relative highs here, right? Now, what does that mean? That means that we want to see liquidity taken above this, right? And oddly enough, or ironically, this is also the period in which we want to see market structure breaking and then a retracement before taking it long. Otherwise, you want to see liquidity taken before heading down to the other side. So that is how I get this question all the time. How do you know what direction the market is going? Easy. Liquidity is the number one answer. Displacement is the number two answer, right? And then, obviously market structure shift, but you need a market structure shift with displacement. Now, if this sounds like Greek to you, I suggest that you join the wait list for Mastermind 2.0, where I go over my exact strategy. I'm going to be going over it in detail, taught by me. I'm going to be teaching you how to chart with no indicators. As you see, my chart has no indicators. I'm going to be teaching you about liquidity, teaching you about market structure, how to find A+ setups, how to trade futures, etc., how to sell options for income, which is something that I always get asked. So that link is in the description. Put your name on the wait list. All right. Still waiting here. Let's see what Tesla's doing pre-market. Oh, Tesla's up a couple dollars pre-market. Nice. Those of you in cash secured puts already printing like crazy on those Tesla cash secured puts, which we bought or which we sold on Thursday, September 7th, before this pop up here. And looks like Tesla's up once again. Looks like Apple is up once again. Again, this is pre-market, but all right, let me see if you guys have any questions. Bull trap pre-market, Lewis, there's no bull. It's just flat. Yes, I would agree with you if there was actually a bull move, but there isn't. Nowhere man. Muted because it's complete BS. All right, Nowhere man, you tell me what the truth is then. This is what boggles my mind is when people say it's complete BS. One, how the hell do you know that what the truth is? And two, if they are going to completely fudge the numbers, like say you were the Fed or BLS, right? Say you were the BLS economist, right? If you were going to fudge CPI numbers and you had complete autonomy to do that, why would you make it higher than expected, right? Why would you bring in month over month core at 0.1% higher? If you had the ability to fudge the numbers, why wouldn't you just say, oh, CPI is at 2%, we hit our target, we're all good? Why would you fudge the numbers? This is what doesn't make sense, is that everyone wants to scream it's BS because most people that do that are not good at trading yet, right? Or they held short positions, for instance, and the shorts aren't paying right now. Or they held long positions and the longs aren't paying. Those are the people that are screaming it's BS. Because if the BLS or the Fed had full autonomy to do whatever they wanted with the numbers, why would they make them higher, right? Like if I was the BLS and my purpose is to lie to people, why wouldn't I say inflation came in way lower than expected if I could just fudge the numbers? Now, I agree with you, the way that they are calculating inflation is different than it was previously. And it is an easier calculation to make it not look as bad. But these releases where it's like 0.3% actual versus 0.2% expected, why would you make inflation higher than expected if you had the ability to just spit out whatever number you wanted? Their goal is to keep as flat as possible. Wow, this is the first I've ever heard of this. Usually people say the goal is to tank the market or the goal is to make the market rally to get rich. This is the first I've ever heard of someone saying the goal is to keep the market flat. Now I've heard everything. If you sell a cash secure put, you make money only on one time premium. What does that mean, Jack? What do you mean by one time premium? I apologize. I don't understand what you're saying. What do you mean by displacement? Displacement is just a major move, either up or down, depending on what you're looking for. So if you're looking for market structure to break to the downside, you want the market structure to happen, but not slightly. You want to see a displacement candle, meaning a long, healthy candle that breaks your market structure in the desired side. Jason, explain displacement. How about you say please, Jason? Can you just explain the word displacement? Goddamn, I just did. Astro Geek. You guys are so demanding today. All right. Please free trade. Also, if you had any company in mind for a leap in either direction, Robert, make sure that you are only buying leaps on companies you want to invest in, not companies somebody else tells you. If you can't find a company that you want to invest in, take your money and put it in an index fund, right? If you don't know what company to invest in, don't go off of somebody else, not even me. Make sure you do your own due diligence and pick a company that you want to invest in. Don't go off of what anybody else, including me, is telling you to invest in. Otherwise, I would say don't buy a LEAP, just buy an index fund, which is what most people should do. Aliens be real? Yeah, of course aliens are real. Why? That's not even a question. Aliens are about as real as the CPI is real. Can you speak on Verizon? I was in a LEAP and sold. What about Verizon? I'm not invested in it. Do we bounce back today on the SPY or go lower? Like I said, I'm not Nostradamus. I'm just waiting for a liquidity event. Like the initial reaction is not always the right one. As a matter of fact, oftentimes it isn't the right one, right? So when CPI takes a dump, or when CPI comes in, much worse than expected, a lot of times you'll see the market rally on the day, right? And then the next few weeks is when we start tanking. So if you're asking me what do I think will happen today because you just want to buy calls or puts, I honestly suggest that you learn how to read the chart, the intraday chart, and learn the tools that try to tell you whether the market is going to go towards the buy side or towards the sell side, right? But trying to guess without a liquidity event taken, trying to guess without market structure, you're just gambling, right? You're just it's just roulette. And nobody can tell you, right? You need markers that tell you where the market wants to go. There's no way that anybody can look at this right now and say, yep, we're going to end the day green or we're going to end the day red. So we're looking for a liquidity event, and then we're looking for market structure shift with displacement. And then you want to trade off of the retracement, whether it's a short or a long. For me, I'm agnostic. I don't care. It's just whatever the market gives me. If I can find an A+ trade that has a high risk to reward, that is what I'm going for. I don't care if the market goes up or down today. We are going lower, tagging today, says Lewis or Luis. We appreciate you. I appreciate you, Armando. Thank you. I thought that if you sell cash gear puts, you receive premium and you are either forced or not to buy the underlying. Well, you'll be forced to buy the underlying if you get assigned. But if the stock price is higher than your strike price, you're not going to get assigned. Is there a direct relation between Dixie and the stock market? Yes. When Dixie goes up, stock market goes down and vice versa. Now, that's not going to happen every time, which is why we look at the Dixie, the VIX. Oh my God, the VIX is down 0.77. Not surprising because CPI just came out. So there is no anticipation of volatility. But you look at the VIX, the Dixie, and the TNX. All of these things have an inverse relationship to the stock market. Right? So when all three of these things are up heavily, it usually presents the stock market with a tough chance to rally and vice versa. ES barely took out London. When will be the time to buy bonds? Last hike? Yes. Now, here's the thing. Here's what I want to say about bonds. If you look at the bond rates, right? So let's take a look at the bond rates real quick. If you look at the bond rates, you'll see that we have the 1 month, 2 month, 3 month, 4-month, 6-month, 1 year, 2 year, all at above 5, right? Now, a high yield savings account is paying around 5. A money market fund is paying around 5. So why would you invest in, or, and I just saw new CD rates come out. I think by Fidelity, they're paying around 5. So why would you invest in treasuries when you can invest in those things and not have your money locked up in treasuries? Etc. Right? If you could just put it in a money market fund, or you could just put it in, a high yield savings account. Here's the reason: because if you are expecting the Fed to cut rates or pause and then not raise anymore after November, right? If November is the last rate hike, then if you buy these treasuries, remember that treasuries have a price, and when yield goes up, price goes down. When yield goes down, price goes up. When the yields go down, so when the Fed announces that it's their last rate hike, and the yields start dropping because folks are pouring into bonds trying to take advantage of these yields before they go away, that will increase the price of treasuries. And those people who have bought treasuries now, the price of those treasuries will skyrocket. Now, you are still promised the yield that you locked in when you bought the treasury. So you can get that yield, but also the price of those treasuries have skyrocketed, and you can sell those treasuries on the open market, right? So on the secondary market. So that is why it might behoove you to buy treasuries as opposed to just putting your money in a high yield savings account or a money market fund, because you'll be able to sell those treasuries for more money once the Fed cuts. However, if you want my honest opinion, I think that the Fed is going to skip in September next week. So a week from today is going to be September 20th. And I do think that November they will raise, and they are not going to declare it as the last raise. So the Fed, even if it is their last rate hike, which I think November will be their last rate hike, they're not going to come out and say, this is our last rate hike, so enjoy, from now on, enjoy the yields while you can, and you'll see people rush into bonds. I think that they will raise and say, hey, we're data dependent. We don't know whether we're going to raise again or not, right? There's no reason for them to declare that is their last rate hike, even though I think there's only one more rate hike in the tank. That is it, right? Otherwise, they are really going to break something. So I think that you still have some time on bonds, in my opinion. Now, I do think we will see a rally in bonds momentarily. So between September 20th and November 1st, we might see a rally in bonds, and I might be playing the Fed funds futures, which is ZT and ZN, right? ZT is the 2-year futures, ZN is the 10-year futures. So if you look at the daily, these look like they are primed for a short-term pop. So I might be playing ZT and ZN on September 20th. And if you want those alerts, make sure that you sign up. At least sign up for the monthly. Actually, you know what? We do have weekly trials now. So the weekly trial to the Discord is $35. You'll see that link in the description. However, you can get a discount to the monthly as well if you use the code DAYOFF, DAYOFF. You'll see that link in the description. But if you want that alert, as well as all of the other alerts and our analysis and our day trades, and our option selling, etc., link is in the description below. Just one option selling contract will make up for the membership alone, right? So that last option that we sold on Tesla, we sold it for $700 a contract, which in my view is free money. All right, so yeah, I do think that there will be a momentary pop on ZT and ZN on September 20th. But I do think that the treasuries will then drop back in price or raise in yield until that November 1st date. I do think that the Fed is going to raise November 1st, which will then be the last nail in the coffin for bonds. And then at that point, I think we can start to accumulate treasuries and accumulate treasury futures as well. So that is my take on it. Is dollar falling? Maggie, you can look at this yourself. Just type in DXY in TradingView. It's right there. Dollar's up 0.16%. Intraday, dollar is falling. Yes. Intraday, but it's still up on the day, and it's going to be bouncing around. But you can look at this yourself. What's a good breakfast recommendation in LA? Francisco says, honestly, Francisco, I don't eat breakfast, so I wouldn't be able to tell you. But there are a ton of good Mexican joints there if you like Mexican food. There's there's your typical brunch spots, etc. But I'm not a huge breakfast person because I like to eat a big lunch, so I don't typically eat breakfast. But I can give you a lot of lunch recommendations if you tell me what kind of food you like. So tell me what kind of food you like, and I'll give you a recommendation. How do you trade traveling? I have this right here, which is a pocket Wi-Fi. Greece is hella cheap. So we paid 12 euros for unlimited internet for the entire month. It's a SIM card that you pop in this pocket Wi-Fi by TP-Link. I think I bought it on Amazon maybe a couple years ago. I think it's like $100. That is how I trade. And then I have an iPad right here, which I use as my second screen. So I have an iPad as my second screen, my laptop, and then that internet. I do miss a bigger screen, but you have to. You can't have everything, right? Like there are some luxuries you give up in lieu of wanting to travel. Can you do some TA on AMC? Not really. Not really. AMC is a toilet stock right now, and I'm sorry to say that to those of you that are AMC fans, but the rug got pulled from under you guys. Do you think the 20-year bond will double in 3 years? I mean, that's a very specific question. The 20-year is not as sensitive to Fed policy, by the way. So everyone thinks about TLT because they don't know any other bond ETFs, right? I don't know where they learned about TLT, maybe from online, but everyone talks about TLT like that is the bond ETF that is tied to Fed policy, and it's just not. TLT is a 20-plus year bond ETF. Fed policy affects the shorter end of the curve. So, you have SHY, which is the 1 to 3 year bond ETF. This is the one that is most affected by the Fed. SHY, right? This is the iShares 1 to 3 year Treasury bond ETF. If you're going to play Fed policy, you want to be in SHY and not in TLT, right? Like I said, I don't understand how TLT got the rap that it did. Are you still in Japan? No, I'm in Greece at the moment. I bought a monthly the week before you had the day off code. You should still be able to use it, Rabbit Hole. All right. Muhammad Malik says, I can attest that a single options or one futures contract trade we take from the Academy can pay for a lifetime Academy membership. I agree, man. I agree. You're telling me. I agree. So we had a couple of trades yesterday. We had the NQ. Was this an NQ? This was an NQ long for 30 points, which is 600 per contract. And then I had a 15%, minus 15% on Tesla that I closed out. And then we also had a short on NQ that ended up for $1,000 per contract. Wow, someone just passed a whole bunch of evaluation accounts. Congrats. All right. So let's see where we are. All right. So if you take a look, like I said, we had equal highs, but we did actually take liquidity above that. And we are now breaking structure to the downside. It's still, I don't like this range bound sideways BS. Like if you zoom out, you could see that we have been trading in this tight range. I really don't like trading in this range. I am more partial to short-term shorts, like scalps at this point, not for a broader move. But I wouldn't mind scalping short from here if we got there. It's just going to be a shorter term move. This is on the S&P 500 futures. So it would be something like this, which is a 2.5 to 1 trade. Maybe move the stop limit a bit up, 2.25 to 1 trade. I'm actually going to send this out. All right. So if we pull the Fibonacci, yeah, let's say that we start retracing back up. This fair value gap lines up with the golden pocket. So I would actually want to take this from here. This is a 2.7 to 1 trade. And will be a 3.5 point stop, which is what, $175 per contract if we get stopped out, and a 10-point move down, so 500 points. So risking 175 to make 500. So that's a good RR. This is not an A+ trade. Market is going to open in 12 minutes, but this is what I'm looking at here. I'm going to set an alert on TradingView, see if we can get up here. I would open up a limit position, but I don't want to, because if I open up a limit position here, hold on, how do I? Okay, I have an alert here. Cool. If I open up a limit position here, I want to monitor how it is that we get there. So, for instance, if we kept moving down, took out more liquidity, came back up, I wouldn't want to be short here. So be that as it may, I have the luxury of being in front of my computer. So I'm just going to set an alert in TradingView next to my price target. That way, when it pings me on my phone or my computer, I can go back and look at it. But I'm wanting to potentially scalp short from here on almost this 3 to 1 trade. All right. Cool. And my screen went out again. My second screen. Damn it. This is going to be a thing. All right, maybe the iPad is not an ideal trading monitor. All right, so my entry will be at 45.14, maybe 45.14. Is there a discount for Academy? Yes, Ty. If you book a call below and tell them that I told you to give you a discount from the live stream today, then if you are approved, okay. So book a call down below. It is the I don't know what the third link down below, I think. Let me see. Do you get the same speed of order fill while in Greece? I hope so. Shit. It's been okay so far. It's just I wasn't sure about live streaming. Now, filling your order and live streaming are entirely different. Fuck, I gotta get my... One second. All right, this candle looks a little strong. I think I want to short from... Oof. Let's see how this candle reacts. If we come back down to 45.14, I think I'll want to short. But if this just keeps going up... Let's see. We have 924. Wait a minute. 924, 927. So this is a 3-minute candle. Let me look at the 2 minutes, see if there's any fair value gaps that we missed. Okay, so the 2 minute fair value gap's a bit larger, which is fine. And the 1 minute... Okay. So I feel pretty comfortable about this with the tight stop. Especially with this wick here. Let's see. I'm looking to get in at 45. If we can drop back down, I'm looking to get in. Otherwise, this thing wants to climb up higher. Let's see. Market opens in 4 minutes, by the way. All right, let me see. Yeah, this looks like it wants to go higher. If we can get a rejection here and fall back below the GP, then I might short. But otherwise, this looks like it might want to go higher before market open. We might. Let's see. Patience. Any thoughts on ARM IPO? I don't even know what that is. I'm sorry, Ole. I appreciate it joining this week. Appreciate you. Mike is screwed, is it? I'm sure you guys hear me. What time is CPI or already came out? Come on, reject. All right. Must be hunting liquidity to take to the upside. No, it's just indecisiveness before market open. There are no slots in September? Really? No entry yet. No entry yet on the trade. Let me check on that. Oof. I wonder if when market opens, we'll see a spike in either direction. So market opens in 1 minute. These highs here are not that convincing to me. We might want to go up and grab some more liquidity before coming down. But if we do get a push down, then I'm likely going to short at 45.14. There it is. Push down. There it is. All right, let's see if we can push down some more. If we can get to 45.0475, that would be amazing. Also, if we get past this level here, all right, we want to go up and take more liquidity. Damn, this thing is absolutely rocketing. Okay. So this right here wasn't like I had suspected that this wasn't enough of a liquidity grab on the buy side. But likely whatever move this is will turn out to be that. Now let me see if I can corroborate that on the left. Yeah, so we have a big fair value gap here. Hold on. Let me remove all these drawings. Wow. All right. So after this, now that the market opened, hopefully we can determine the direction here. Definitely didn't want to give us that short. Now we are taking more liquidity from the buy side. The dollar index is almost flat. I saw that too. Can't book in October. I'm working on that right now. I just emailed my team. So give me 1 second, guys. Yields and Dixie went down since release. What does that mean? If the dollar goes down, it means that there is an indication or at least an expectation that yields will also soften, right? Meaning that the Fed is almost done with hiking rates. Like I said, I think they're going to hike one more. What I want to see right now is if this is going to be like, see what NQ looks like. NQ already took liquidity. NQ might be a cleaner trade today. Let's see. All right. Looks like our analysts are already on a short, potential short. No, they're not in a short, but already on a the monitoring of a short. Tesla. Oh my God, these cash secure puts must be up like crazy. Let me look. Yeah, I'm up 75% on the 220 October put. And then those who caught the December, because we also then sold the December 200 put for 700, and those are now worth only 380. So we already made 320 per contract on those. Wow, RIP to those that had shorts from yesterday. I saw all over Twitter people had mad shorts from yesterday. Isn't so that selling puts gives you fixed yield at the expiration? You don't have to hold it until expiration. You can close it whenever you want. All right. Holy hell, where are we going to here? So apparently the market is interpreting, well, obviously the initial move again is not always the right move, but so far the market is interpreting the core CPI coming in as expected year over year lower than it did the previous month, knowing that the Fed is going to look to that, knowing that the Fed is going to skip now next week. The market is interpreting that as bullish. All right. No trade here. Let me look at the individual stocks. So AMD still coiling. I do think there's a pop for AMD. I do think that Apple, like I said, potential drop to 160 in my view. It might take a very long time, so those will be long dated. Nvidia is the stock that keeps on spanking shorts. It just will not go down. Amazon sometimes offers good day trades. Hey, hey, hey. Wow, Tesla's going crazy again. Call credit spreads on the monthly for Apple. Apple short could be nice, like you were saying earlier. Yeah, I think so too. Although Although it's not going to pay a ton of premium. I stayed in the Tesla call yesterday. I just got up 16%. Well, maybe you should close it, Anthony. Puts 170 this Friday. I wouldn't go that short. Dumping Apple, scooping Tesla. I think you're a bit late on Tesla. All right. All right. So it looks like we're taking liquidity up here. So we had yesterday's, well, it wasn't yesterday's high actually, but it was a high from yesterday. I'm waiting on one of two things here. I'm waiting on one of two things. Either we continue to rocket up to September 12th high. On ES, that'll be around 45.39. On NQ, we are talking about 15.659. Or we break below the opening candle. We close below the opening candle, in which case we'll be ready for shorts again. All right. For those of you that were asking about Calendly, I'm checking on that for you. Okay, it looks like you should be able to now. For those of you that were asking about on Calendly, you can. Looks like you can schedule it now. So sorry about that technical mishap, but it looks like you can schedule it now. So make sure you click on it. Tell them that I said to give you a discount from the live if you are accepted, and they will honor it. Because if they don't, somebody's getting fired. No, I'm kidding. So make sure you click that link. See, this is most of trading, is just waiting and waiting and waiting. You don't necessarily have something to trade every single time. And that's okay. Have you guys taken any trades today? Let me know. Imagine if we had those Tesla calls that lost 15%. Yeah, imagine if you held them and they were down 100. I mean, that's not how to trade, Jarhead. You have to be very rigid about where you cut your positions. Also, they were up 10% at one point, right? Like you could have booked profit if you wanted to. But yeah. Took SPY calls, Carlin said. I was up in Tesla calls. 0 trades for me, just collecting premiums on coin CCs. All right. Here it comes on the small caps. NQ is better than SPX. Some days no. Is ES taking liquidity? Yes, but we don't have a market structure shift yet, so no trade. RTY. This is what I was talking about. It's all right. I wouldn't have caught that anyway. There wasn't an optimal entry here. But like I said, there's more runway for RTY to fall since it was up 1.1%, right? Holy hell. I should have just naked shorted this just off the strength of me feeling it. God damn it. I would consider shorting it here. There is a low at 1851. $1851.2 from August 25th. Right here. So if we break this level, we might have a broad-based short for a 15-point move or greater on RT. RTY, sorry. So this right here is our 15-minute FVG. I'm just going to mark this so that when I go to the 5-minute, I know it exists. All right, I'm gonna set a trigger on RTY here. Add alert. And I'm gonna let it alert me if it comes back up. All right, let's see if we can wipe out the 930 candle. This one. All right, I might take an aggressive entry off the 1 minute. I might take an aggressive entry off the 1 minute. If we can get to 45.1925, I might take this short. Give it to me. It's not even respecting this fair value gap here. This one. But if it can come back up just a little bit, I'll take my short with it. All right, this is where I want to short. This is a super aggressive entry. All right. Are you going live on FOMC again? Yes. God, these candles are too impulsive for me to even feel comfortable taking a short here. I'll enter short if we come back down below this candle. Otherwise, these candles are too impulsive. I mean, at the end of the day, it is CPI day, so I can't be mad that there are not any decent trade entries, but yeah. Yeah, these candles are too impulsive. So you can't take an aggressive entry. Today is all about waiting for confirmation, honestly. Can we short Apple at 175? It depends on how you want to short it. I'm in the short from 45.14. I mean, we're already at 45.20, so that's Marcel, not honestly, that's not how you should be trading, bro. You don't know if you should get out. You should have not entered the trade if you don't know. You're gonna kill your account doing that. Just entering trades and you don't know whether to get out. No, man. You should always have a specific take profit and a specific SL. Always. An exact one. Otherwise, you shouldn't enter the trade. Come on, give me an entry. This is so ugly here. All right. Dixie, VIX, and 10-year are all turning back up. Yeah, you're right. Well, no, VIX is down. VIX is down heavy. It's down 3%. What are you talking about? All right. Break below this fair value gap, please, so that I can take this short. I mean, honestly, there's no trade here. It's all about big tech today. It's driving the market. Not really. Kind of, but you know, Apple is down. Google is down. I think it's mixed. Microsoft, Meta are up. All right. So picked up my short at 45.19. I'm going to move my stop limit to break even soon. I'm going to move my stop limit to break even. That way I'm in a free trade. But I cannot feel good about this just yet. So we are up 450 on this, as you can see here. Up 450 on this short. I'm going to move my stop to break even. That way I'm in a free trade, and the worst that can happen is I get stopped out for 0. Oh, hell yeah. We are up 725 on this. We are up 725 on this. My stop is at break even. I'm just going to let it ride. Up 800 on this right now. All right, let's go for low of the day. Or should I take the 800 and go home? Let's see. This is unreadable. There's a fair value gap here. Up 825, up 850. I'm just going to flatten this. Done. There's a fair value gap here that I'm worried about. So I want to take that profit. And price is unreadable to me right now. Until we get a definitive break of structure. And a nice retracement back up. Then I'll take it again. By short, you mean puts or sell puts? I mean, I'm selling the futures contract. These are futures. Well, Marcel, you definitely got saved. You should be up here, and I wouldn't push my luck, to be honest. Sony Craft, sick trade Z got me back in the green for the day. Appreciate you, David. Thanks, Z. Random car breaks. The SPX 10-minute told a better story on the short. I'll look at that, Anthony. If we go below 445, would be breaking the trend from the daily. All right. This is how trading is. Like, if this is boring to you, then maybe trading isn't for you. But it's literally just waiting hours for an opportune moment. Obviously, I can enter many more trades if I wanted to, but it's all about entering optimal trades. Fuck, I should have entered that Apple short yesterday. I knew it. All right. I don't know how we made money off of this ugly ass shit here. But it is retracing. I am very reluctant to short again on the retrace. So for those of you that are looking for a potential re-entry, don't do what Marcel does and enter a trade and not know what to do thereafter. If you enter here, I would set a very aggressive stop right above these candles. So if you enter here, it would be a 45.15.50 entry on ES and a 45.22.50 stop, somewhere around there. On the SPY would be, you take puts at around 446.3, and I would exit those puts for a loss at 447. Now, you're much better off trading futures than options, in my opinion, on day trades. But I know a lot of people still trade options. All right, Francisco, if look for a place called Leo's Tacos. Z, we are killing it. Hell yeah, absolutely killing it. And for those of you that aren't in the academy, you're missing out. Make sure that you click the link in the description and sign up in any way that suits you, whether it's the monthly or you sign up for the mastermind that's coming up October 3rd. We are running the masterminds and taking spots for this right now. So make sure you click the link in the description, put your name on the wait list. Otherwise, spots will go fast. Leo's Tacos, Francisco, is probably my favorite taco truck in LA. If you're looking for a sit-down Mexican restaurant, try a place called Lares, Lares. It's in Santa Monica. In terms of Mediterranean food, there's quite a few. So I'll give you a Persian restaurant called Shamshiri. It's in Westwood. Shamshiri is amazing. There are Zankou chicken spots all over the city. So Zankou, Zankou. And then in the valley, there's a place called Furnsaj, Furnsaj. So check out those spots. Abraham, Leo's Taco Truck says handmade tortillas. Literally my favorite tacos in the world. Better than any taco I've ever had in Mexico. Except for El Tomate in Guadalajara. That's the best pastor I've ever tasted. You said VIX is rising. The last time someone said that, it was down 3. What are you guys talking about? The VIX is down 3.6%. What do you mean rising? What VIX chart are you looking at? Are you looking at the US VIX? Or I don't know, the VIX on the Venezuelan market? What are you looking at? The VIX is at the low of the day, as a matter of fact. Marcel, I hope you took profits, bro. Z, which platform do you use for futures trading? I use Thinkorswim. You can use Interactive Brokers. You can use whatever you want. Honestly, the wheels, Interactive Brokers, if you're international, if you're in the US, I would say use Thinkorswim. But Interactive Brokers and Tradeovate will have better fees. I just don't think they're as good in terms of fills. Oh my God, this thing is tanking. Fuck, I should have held on to those shorts. I'm looking for an Apple short. Broad based though, not for today. If I sold the 170 calls and bought the 175. Oh, hell yeah. I think I'm going to do this right here. I'm going to alert the short right here. All right. Eric, appreciate you for donating. Thank you so much. Did you ever get a chance to try the Greek wine at Atsina? Did we try that? No. I thought I did. Apparently, no. I got out at break even finally. How did you get out at break even? You should have been up. ES is at 45.05. You entered at 45.14. You should be up 9 points, $450 per contract. Yeah, I place trades in Toss, not on TradingView. Surf and Dragon. Love how you asked the lady. I do that too. Yeah, I had to ask her. I wasn't sure. Apple short would have been nice. I'm going to short it anyway. I'm sending it out right now in the academy. It's going to be a credit call spread. I'm actually going to send it out right now. All right. If you guys want this short, make sure that you join below. Opening up a credit call spread on Apple expiring October. What is the expiry going to be? All right. It's going to be in October 20. Selling 1.7. Like even. All right. So I'm sending out a credit call spread on Apple for my broad-based short. Because I do think Apple will hit that 160. I don't know if it'll take a month. I don't know if it'll take 2 months. $317. Are you trading futures? I already traded futures. Yeah, I traded ES futures. Galika is a very good Greek wine, rosé. I'm not a huge fan of rosé. Why not buy a put option? Because puts is how you get killed. I don't buy single options. I sell spreads, I sell cash secure puts, I sell cover calls. I don't buy single options. Look at SPY long green wick at 4 p.m. EST. That's exactly where we ran up to today, because basically to the penny. What do you mean? Sorry. I'm not certain what you mean. 4 p.m. EST Tuesday. Yeah. 4 p.m. EST Tuesday. Okay. Not sure what the significance is there. Sorry. Apparently, word on the street is a Utah woman swallowed an AirPod thinking it was a vitamin. Y'all are crazy. All right. The SPY looks like it's potentially. Wow, we hit low of the day. I exited at 45.10. I could have gotten another 7 points per contract, which is another $350 per contract. Oh, well. That's how it be. But green is green. I'll take it. For those of you that were trying to sign up, are you still having issues? I got a new link. One second. All right. So it looks like the market is stuck in this ugly range. Again, if you're trading options, this is the type of stuff that kills you, right? Because this kills options premiums. So looks like we took internal sell side, even though these can be considered relatively equal lows, but we might be going back up top for more liquidity. Let's see. How do you deal with the gap that was created in the contract rollover as it relates to charting? I don't. Just click on this B adjust here in TradingView and everything will adjust. No, for those asking if I sent out the Apple trade. All right, actually, I'm going to do it right now. While it's still 3:30, we're going to get 3:30 credit for this. All right, you guys should have gotten it in the academy. So you guys should see it there. You think we'll start trending up after that double bottom? Don't trade off of double bottoms. It's how you'll go broke. So make sure you are looking at something a bit more nuanced than just double bottoms. Retail. All right, awesome. I got filled. Yeah, it looks like we're going to trade in this range all day, which would be fine as long as the market structure and as long as the imbalances such as fair value gaps are there. Like right now, if let me pull up the Fibonacci. Like if we retrace here, I'll be a happy camper and I would take this long. My God, why does this always happen? All right. I'm gonna go grab some food. Do you want to eat? Okay. I'm gonna go grab some food. Starving, haven't eaten all day, and then I will be back on the Discord to trade with the Academy. Oh, let me check on that link for you. The link should be fine. But just in case, use this link. For those of you that were asking about a discount for the Academy Lifetime, use that link and tell them that I told you to give you a discount from the live stream. So we did not have a hot CPI. Rafael, you can search for this. Also, rewind the tape. I went over it multiple times. We did have a hot CPI month over month on core, not a hot CPI year over year for core. And we did have a slightly hot CPI year over year for headline. But use that link, and you should be able to book something within the next couple of days. Apologies if it wasn't working before. And those asking if I posted Apple in the Discord, yes, I just posted the Apple trade on the Discord. All right. Well, not obviously we love big trading days, but I pulled about 850 off of that short on ES. Looking for a potential long here, but don't know yet. I'm going to get some food first, and then I will join you guys who are in the Academy. For those of you that aren't, hope you guys enjoyed this live stream. Hope to see you in the Academy one day. Thank you guys so much for your donations. Hit that thumbs up on your way out. And yeah, we will be going live again for FOMC next Wednesday. But thank you guys so much for joining the live stream. I hope you guys have a great rest of the day. Peace.